Did you know that 82% of recent home buyers regret their purchase? That's a staggering number that might make you think twice about buying a house right now. But why are so many homeowners feeling buyer's remorse? Let's break down the reasons behind this shocking statistic and explore what's really happening in the housing market. By the end of this video, you'll have a clear understanding of whether buying a home right now is a good idea or not. We'll look at the hidden costs, insurance premiums, and the changing landscape of wealth creation through home ownership. So is the American dream of home ownership turning into a nightmare for many? Or is there more to the story? Join us as we uncover the truth behind this wave of homeowner regret and what it means for you and your financial future. When you're dreaming of owning a home, it's easy to focus on the down payment and mortgage. But there's a whole world of hidden costs that many new homeowners don't see coming. These unexpected expenses can turn your dream home into a financial nightmare if you're not prepared. Let's talk about inflation. It's at record highs right now, and it's making a lot of people question whether buying a home is still a good investment. Imagine this. You budget $2,000 for your monthly mortgage payment. But with inflation driving up the cost of everything from groceries to gas, that $2,000 suddenly feels a lot tighter. You might find yourself struggling to make ends meet, even though you thought you had it all figured out. But wait, there's more. Property taxes are skyrocketing, and they're hitting homeowners hard. The median single-family home has seen a 25% increase in property taxes from 2019 to 2023. What does that mean in real dollars? Let's say you bought a home in 2019 and were paying $2,400 a year in property taxes. By 2023, that same bill could be over $3,000. That's an extra $600 coming out of your pocket each year, just like that. Here's a shocking statistic. Over 25% of homeowners with mortgages are spending more than 30% of their income on housing. Financial experts call this being cost-burdened. What does that look like in real life? Imagine you make $5,000 a month. If you're spending more than $1,500 on your mortgage, property taxes, and insurance, you're in this group. That doesn't leave much room for savings, emergencies, or even simple pleasures like dining out or taking a vacation. These hidden costs are like a slow leak in your financial boat. At first, you might not notice, but over time, they can sink your dreams of financial stability. You might find yourself putting off home repairs, skipping vacations, or even struggling to save for retirement, all because of costs you never saw coming when you signed on the dotted line. But here's the thing. Knowledge is power. Understanding these hidden costs is crucial for making an informed decision about home ownership. It's not about scaring you away from buying a home, it's about helping you go into it with your eyes wide open. The question is, how do these hidden costs stack up against the potential benefits of owning a home? Is the American dream still worth pursuing? Or is it time to rethink your approach to housing? As we dive deeper into the world of home ownership, we'll explore these questions and more. Just when you thought we'd covered all the hidden costs of home ownership, there's another surprise waiting around the corner. Insurance premiums. This often overlooked aspect of owning a home can make a significant dent in your wallet, and it's been getting worse in recent years. Let's talk numbers. Home insurance premiums in the U.S. have skyrocketed about 20% between 2021 and 2023. That's a massive jump in just 2 years. But wait, it gets even more concerning. Experts predict we'll see another 6% increase by the end of 2024. These aren't small changes we're talking about. They're dramatic shifts that can seriously impact your monthly budget. So why are insurance costs climbing so rapidly? It's not just greedy insurance companies trying to make an extra buck. The real culprits are natural disasters and climate change. We're seeing more wildfires, floods, and severe storms than ever before. These events are costing insurance companies billions, and they're passing those costs on to homeowners. Think about it this way. Every time a major disaster hits, insurance companies have to pay out huge sums to affected homeowners. To stay in business, they need to raise premiums for everyone. It's a vicious cycle that's showing no signs of slowing down. Now, let's take a look at the extreme example that might make your jaw drop. Florida, the Sunshine State, has become the poster child for insurance nightmares. In 2023, the average homeowner's insurance rate in Florida reached nearly $11,000. That's not a typo. $11,000 a year just for insurance. It's more than triple the national average. You might be thinking, well, I don't live in Florida, so I'm safe. But remember, insurance rates are rising everywhere. While your premiums might not hit Florida levels, they're still likely to increase significantly in the coming years. Here's the kicker. Homeowners insurance isn't optional. If you have a mortgage, your lender will require you to have insurance. Even if you own your home outright, going without insurance is a massive risk. One disaster could wipe out your entire investment. The question is, how do you protect yourself from these rising costs? Knowledge is power. By understanding these insurance trends, you can budget more accurately and avoid financial strain. When you're shopping for a home, don't just look at the listing price and mortgage rates. Factor in current insurance costs and potential increases. Consider asking for insurance quotes before you make an offer on a house. The age of the home, its location, and even the construction materials can all affect your insurance rates. A house that seems like a great deal might come with sky-high insurance premiums that make it less affordable in the long run. For decades, the American dream has been firmly rooted in home ownership. It's been seen as the primary path to building wealth and securing a stable financial future. But is this still true today? Let's take a closer look at the numbers and see if the dream matches reality. First, some good news. Single-family homeowners still accumulate significant wealth over time. On average, they build up about $225,000 in wealth over a 10-year period. That's a substantial amount that can make a real difference in someone's financial life. It's no wonder that so many people still view buying a home as a smart investment. But wait a minute. Remember all those hidden costs and insurance premiums we talked about earlier? They're eating into that wealth accumulation faster than you might think. And here's something even more concerning. 44% of recent home buyers have taken on additional debt just to maintain their lifestyle. That's nearly half of new homeowners going deeper into the red instead of building wealth. So what's going on here? How can home ownership be building wealth and driving people into debt at the same time? The answer lies in the gap between perception and reality. Many people buy homes thinking they'll automatically start building wealth, but they don't account for all the ongoing costs. Think about it this way. You buy a home and its value increases over time. Great, but at the same time, you're paying higher property taxes, dealing with unexpected repairs, and watching your insurance premiums climb year after year. Suddenly, that wealth you thought you were building starts to look a lot smaller. And here's another wrinkle. Owning a valuable home doesn't necessarily mean you're financially stable. Your house might be worth $1 million on paper, but if you're struggling to pay the mortgage, property taxes, and insurance every month, are you really wealthy? It's like being asset rich, but cash poor. This disconnect is a big reason why so many new homeowners are feeling regret. They bought into the idea of home ownership as a path to wealth, but the reality is much more complicated. They're finding themselves house rich, but budget poor, struggling to maintain their lifestyle while keeping up with all the costs of home ownership. It's not that home ownership can't build wealth, it absolutely can. But the path isn't as straightforward as many people believe. It requires careful planning, budgeting, and a realistic understanding of all the costs involved. Simply buying a home and expecting wealth to follow is a recipe for disappointment. So what does this mean if you're considering buying a home? It means you need to go into it with your eyes wide open. Don't just look at the purchase price and potential appreciation. Consider all the ongoing costs and how they'll impact your overall financial picture. Ask yourself, will buying this home truly help me build wealth, or will it stretch my finances to the breaking point? So, what's the bottom line? Home ownership isn't a guaranteed path to wealth anymore. You need to be smart about it. If you're thinking of buying, don't max out your budget. Leave room for those surprise costs we talked about. And don't just go with the first offer you get. Shop around for insurance, lenders, and realtors. Get multiple quotes and compare. Not ready to buy? That's okay too. Look into states with lower taxes or different types of housing that might work better for your wallet. Some places even offer property tax relief programs worth checking out. Here's the real takeaway. Do your homework. Buying a home is probably the biggest purchase you'll ever make. Don't rush it. Research everything. Understand all the costs involved. Home ownership can still build wealth, but only if you go in with your eyes wide open.